Now, on Wednesday, May the 10th, we have US inflation data out. And the market's an interesting point right now. The headline for the last print in March was 5%, and it's expected to fall to 4.9%. You can also see that the core inflations are expected to stay around that 5.6 mark. Now, the US dollar, after the last Federal Reserve meeting, found weakness on expectations that the Fed has finished their hiking cycle. And if you just take a look at the short-term interest rate market expectations, you can see that markets are now expecting a nearly 100 basis point rate cut into the end of the year. So that has been helping lift gold higher out of the last Federal Reserve meeting. Now, looking at Seasonax's risk event tool, we can also see that in the day prior to the US inflation print and the day after, gold has a tendency to gain. Now, it's not a massively strong pattern, but it is a bias towards strength, with 57% of the time gold gaining and an average return of 0.18%. And the annualized return is pretty healthy. So with gold likely to benefit from a fall in US rate expectations, a weaker US dollar, and if there was a weak US CPI print, could gold be about to move sharply higher? Major trade risks. The major risk here, of course, is that the US dollar starts to strengthen on any banking fears that return, and or a very high CPI print that will bring expectations of more Fed rate hikes to come. Remember, don't just trade it, but season exit.